All right, everyone, here we are with ticker symbol WWR Westwater's Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Westwater's had a run, and it's been in a bearish trajectory for quite some time. Broke through the 50-day moving average slightly, and since that point it's been falling again, and we've been more in bearish territory than bullish territory for the last couple of weeks. Now, Westwater's Resources Inc. may have potential. I mean, a lot of people are saying good things about it. There's a lot of news. There's a lot of speculation that created this run. So in the long term, could there be a possibility of a turnaround? There could be if things go well for them and they actually go through what they've stated that they're going to provide, right? They're actually going to be a provider, one of the only providers, or one of the largest providers of, obviously, metals and minerals and stuff. So we're going to have to see how Westwater Resources Inc. plays out. This was a great run because of speculation, but we're already seeing a lot of profit taking and fear and uncertainty kicking in. And when you look at volume, which volume is a little bit lower than what it was before, it's been getting quieter every time. And then also the rating right now is not either a buy or a sell, which is a good sign, saying that if it's not saying sell, then it's not also saying buy, but then it's not also saying get out. You know what I mean? Like, it doesn't mean that this is a terrible stock. I mean, this is just a stock that had a run, and I would advise doing your due diligence, your research as an investor, and just double check if this is something that you would want to participate in, or if you're currently participating in it, do some due diligence before you go ahead and make a decision whether you're going to stay or get out or put a larger position. But let's go ahead and look at what's important for tomorrow. So right now, obviously support was broken through, and this is going deeper into bearish territory and further down the line into obviously getting further away from the 50-day moving average. Now, our resistance has slightly moved as well. It's the highest point before the bearish run started and continued, right? Because it was already starting, it leveled off, and then it continued and it hit a deeper slope in a downward direction. So we're going to have to look here at what's important for tomorrow. The first thing is the 50-day moving average. It's 572. I'd write that down. 572 is an important number. As long as we're below it, we're in bearish territory. The moment we cross it, we're in bullish territory. So the bears right now are dominating. And for them to continue to work their way down to newer lows, it's currently right now at 460. They're going to try to break through 455. If they can break through 455, I'd pay very close attention. I want to emphasize to all investors, pay close attention to how this stock is reacting. How quickly is it hitting newer lows? And are the bulls even trying to reappear? As you can see here, the bulls barely appeared today. That was all bearish run. So that's something you need to pay close attention to for tomorrow. How is it playing out? Who's dominating it? And how much more control do the bears have over the bulls? And who is dominating the chart? Put your 1 minute, your 5 minute, your 15-minute chart so that you could see those time frames and who is actually taking control. As of right now, the bears have been, and also when you look at it, 455 is the support level, and if that gets broken through, this could test newer lows and newer supports, and it's moving further away from the 50-day moving average, confirming more control for the bears. Now, on the other hand, we have what the bulls want, and the bulls want to cross the 50-day moving average. That's a good turnaround point and a good signifier that the bulls are starting to get back into bullish territory, to start gaining leverage, but they need to break through this resistance level 595, turn it into a support so they can start to work their way up to newer highs and newer resistance levels, moving further away from the 50-day moving average in an upward direction. So it's super important that the bulls break through 595, turn that into a support so they can run up, build a momentum, and start to work their way up to newer highs. Obviously, that's the resistance level that can go ahead and confirm they've gained control by testing it, improving it, and turning it into a support. But the bullish territory will be crossed once the bulls cross 572 and start to work their way up. And then they can obviously work their way up to this resistance level to start to pull away from the 50-day moving average in an upward direction. Again, I want to emphasize to all investors, pay very close attention to how quickly this breaks through newer lows and newer support levels, and especially the first one that we're looking at right here at 455. As always, thank you guys so much for watching. If you feel inclined or encouraged to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.